Hey guys, Mr. T here. This is another video. This one's on workers' compensation insurance. So businesses can be liable for their workers' injuries which might occur because of any work that they're doing for that business. So to insure against this risk that the employers have, they will take out workers' compensation insurance. So in South Australia, this used to be called work cover until very recently, but it's now known as Return to Work SA. This scheme, what it does is collects premiums, that's the special name for insurance payments, from the businesses, and use those payments that they've gathered all up together from all the businesses to pay out any claims from employees that have been injured. So those premiums are calculated at the end of each financial year, so keep in mind financial year is July 1 to June 30 of the following year. And that premium, the amount that the businesses pay, is based on a few things. Firstly, the total remuneration, which is paid to the employee, so that's all of the payments made to employees over that financial year. The amount's also based on the industry premium rate, so that's a percentage rate that the government decides, and that reflects the risk of injury from the business. So that can go from really small, like 0.3%, all the way to like 7% or even higher than that. And obviously 7%, the higher rates would be for really dangerous businesses, like I don't know, maybe mining or something, where there's risk of cave-ins or rock climbing, stuff like that. When there's a high risk of injury, your premium rate is going to be higher. A lower risk of injury, like retail, a little computer store, accountancy, you're going to have a lower premium rate. So that's going to give you a percentage of the amount of money you're giving your employees, which you have to pay to the government for insurance. But then they offer you a discount which is based on which is on the base premium. So the base premium is just the percentage determined by the premium rate of the total remuneration, and the discount is based on that, and it's offered by the government. You'll see a table on in your textbooks that show those discounts. And then lastly after that is claims. The cost of any claims made in the past financial year is added on to the premium that you have to pay, and this cost can be up to 3 times the discount. It won't ever exceed 3 times the discount. So if you made more claims than 3 times the discount, well, you're still only going to pay 3 times the discount amount. These parts represent the premium paid before tax, so we know that as a pre-tax premium. On top of that, so we're not finished paying money to the government yet, businesses then pay 2 taxes on top of this pre-tax premium. The workplace health and safety fee, they call it a fee, it's just a tax, 2.3% of the base premium. So the base premium being the total remuneration times by the industry premium rate. And GST, which is on everything, 10% of the pre-tax premium, which is all of this. So there's a bit of looking back and forth at small parts of these 4 things. You'll see hopefully in the following example that it's not too bad. So overall, the calculations for workers' compensation insurance a business pays can be summed up as 1. Find the base premium. Base premium is total remuneration, so everything that you pay to your workers times by your industry premium rate as a decimal. So convert that percentage to a decimal, don't just times it out. Step 2, find the discount that you're allowed and subtract that from the base premium. The discount table's on page 172. Step 3, add any claims you've made in the past financial year, but only up to 3 times the discount. If it's less than 3 times the discount, well, you do the full claim. If it's more than 3 times the discount, well, you only do 3 times the discount. 4, add the work health and safety fee. Work health and safety fee is the base premium, which we calculated from these top 2 portions there, times by 2.3% as a decimal. Step 5, add the GST. GST is the pre-tax premium, so all of this, 1, 2, and 3, times by 10%, 10% as a decimal. So let's run through an example here. A store paid its workers a total of $800,000 last financial year. It's a retailer, so its premium rate is only 1%. It had claims of $1,500. Find the business's payable premium. So follow the steps. Step 1 is the base premium. It's going to be total remuneration, $800,000. Times by industry premium rate as a decimal. 1% as a decimal is 0.01. So the base premium, 800,000 times by 0.01. Base premium is $8,000. $8,000 there. The next section is the discount. So we need to work out the discount and subtract it from the base premium. Now the discount table is on page 172. So look at that. So minus discount. So if you look at the page 172, if you're not doing this subject or you're watching this video elsewhere, then the table I'm talking about may be in a different place. You would just be looking for base premium discount. So the base premium here is $8,000, and the discount that you're offered is 5% for any base premium between 0 and $9,999. So it's going to be 8,000 times by 5% is a decimal, so 0.05 is going to be 8,000 times by 0.05. $400. So therefore, your premium right now is going to be $7,600. $7,600. Next, you have to add any claims. Claims up to 3 times the discount. So discount was $4,000. 3 times discount is $1,200. But the claims were $1,500. Therefore, claims are going to max out at 3 times the discount, which will be $1,200. $1,200. So you can see where the 3 times the discount is sort of the limiting factor there. They made $1,500 in claims, but claims can only go up to 3 times whatever the discount was. 3 times the discount was $1,200, so their claims are only going to be $1,200. So pre-tax premium is all those 3 parts so far, those parts that we've calculated so far. So 7,600 plus 1,200, 7,600 plus 1,200 is $8,800. So that's that. Now we have the additional taxes at the end. Work health and safety fee is the base premium times by 2.3%. So this is where it's important to know what you're calculating, because the base premium is not this 7,600 bit. That's when you've taken the discount. The base premium is this $8,000. So WHS fee is 2.3% of the base premium, which was $8,000. So 2.3% as a decimal, 0.023. 8,000 times by 0.023 is $184. And then GST is 10% of the pre-tax premium. So the pre-tax premium we worked out to be $8,800 times by 10% as a decimal, 0.1 is equal to 8,800 times by 0.1, $880. Therefore, payable premium overall is going to be all these little parts that we've worked out, added together. Pre-tax premium, $8,800. So I'll underline that. Plus the WHS fee, plus the GST. So 8,800 plus 184 plus 880 is going to be $9,864. Therefore, the store must pay a $9,864 premium for the last financial year. Okay, so hopefully that helps you out. It's quite an involved process. The maths for each little component isn't too bad, but just keeping track of what you're adding and taking together is a little tricky. And I'll see you in the next video.